everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow's trading being the 20th of the month, wrapping up the month and kind of winding in towards the end here. Pretty good volatility today. I certainly am not upset about the movement that we're getting. Of course, not all of the markets sharing that sentiment, but the index market's just ripping higher. So just some beautiful continued movement to the upside. Definitely hoping that this continues, because I love the trading opportunities that these kinds of days bring. So fingers crossed there. Now, as always, let's swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list so that you know every single time one of our videos comes out. Along with that, in the email, we talk about different stocks, different cryptocurrencies, all kinds of stuff inside there for possible longer-term investment options. So a great daily Outlook newsletter to get your hands on. Now, along with that, at the bottom of the page in the blog post section, we talk about two major things every single day. First, before the live trade room opens up every morning, we post the live trader morning prep levels, and those are the big levels of support and resistance for that day, so you can have all of the big potential turning points on the day before the market even opens up and gets going. Along with that, in the afternoon, we go over either a live trade room example or we go over a market psychology where we kind of wrap up what we saw that day or just kind of overview everything that's going on so that we can continue to learn as much as possible every day. If you haven't done so already, make sure to click on the live trade room subscription and trial info. That's going to let you sign up for a one-day trial, so you can sit down with us in the live trade room. You can see our screens. You can see what we're doing, what we're trading. You can trade along with everybody in the room, and you can talk to the members and all kinds of cool stuff. So it's a great way to kind of see what all is going on and see, just in general how things operate. Of course, if you do enjoy it, you can always sign up for a weekly or monthly subscription. And if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look at the euro, like I said, not all of the markets really followed through. We had the early morning movement, pretty nice and bearish, but when it came to the US session and even early morning session, everything just kind of started stalling out a little bit. So a beautiful kind of evening into early morning trend, and then we started going into a little bit of a range. And by the time they made their way back down to those lows, buyers were already having a loss of faith in the continuation of the downside, and they started buying into it. So that really leaves us off with the overall downside bias, at least for today. If we zoom out a little bit, though, we can see why those sellers might be having a little bit of trouble. Continuation to the downside makes sense, but when we start running into these major swing levels, this is a long-term buying opportunity that a lot of buyers may be jumping in on for a rally back up to those overall highs towards the 220s. Now, that is a longer-term potential play, and there may be a little bit more pull-down on this, especially if we can get some movement back towards those earlier areas of interest down here at around 15,200. But where we stand right now, we're sitting directly on top of a huge buy zone for long-term buyers. Now, the sellers still haven't given up the ghost on the faster time frame. Zooming in a little bit more, we can see the sellers are still active and they're still holding the market down. So until those sellers get out of the way, we're going to have a tough time trying to, turn into long-term buyers, especially if you're a short-term trader. So really what I'm looking for right now is for the downside to potentially continue a little bit, but very weak. Every time we push down into these lows, I'm assuming that there's just going to be buyers underneath it, those long-term buyers stepping up, but we may have some short-term selling opportunities for the scalps on the down end. Now, if we do start getting that reversal back up, which is really what I would like to see, we have a lot of levels of resistance in the way that we need to break through. Resistance at 655, 5,700 and 5760s are all in the way. Now, that doesn't mean that we can't look for buying opportunities. We certainly can. But once we start getting into these areas, we have to be a little bit careful because there will be potential sellers trying to come in, not paying attention to that big zone of buying that we're talking about down here, and they may be trying to sell those down. Now, the reason that's important is because that may end up giving us some trapping areas. Sellers trying to come in, traps them out. We can use it as support for a bounce. Use it for support as a bounce, etc., all the way back up. So in the long term, definitely looking bullish, but we're talking several days, possibly even weeks for upside momentum. In the short term, though, the sellers definitely still in the game. They're losing their grip, but they're still in the game. So really, both ends of trade should be okay. Now, over on looking at gold, we had a little bit of kind of the inverse. We had a good kind of I guess, middle portion. It was really range bound, really choppy, sloppy, had a quick snap lower at 4 o'clock, and that snap lower was met with an immediate reversal right back up to a brand new high. In the grand scheme of things, that really just gives us an overall range. We have a new high into a big new low into a new high, and we're probably going to try to cycle back down to those lows. Now, whenever I'm looking at those overall cyclical type moves, I always like zooming out and seeing what the bigger trend is. And it's no wonder that that buy move was so aggressively snapped higher, because this is a big snap down in a very bullish market right off of those channel lows. So the fact that we cycled off so aggressively on those channel lows, we're now trying to see the sellers holding the top. It's such a weak angle to this level that I can't even, my charting, it won't even let me draw it. So the fact that we have such a weak high being put in by the sellers, I have to go along with that bigger trend. We have the buyers that are in play. They bought, I mean, they snapped that thing higher. And now with that amount of aggression to the upside, I'm looking to buy, but I want to buy at as good of a price as possible. We're getting stuck around this monthly resistance coming in at 41.4. And although we do still have a little bit of time until the end of the month, the closer and closer we get towards the end of the month, the more and more important those levels become. So because of that, we have a current wedge forming as well. I would rather wait for this to attempt to break down, assuming that that sell is going to be a failure, going along with that bigger trend, buying off of that 38.8 and then shoving the market back up towards those highs. So my big area of interest is 38.8 or lower. 36.9 could also be a potential nice area of interest. I don't know if the market's going to be that kind to us, but 38.8 for sure, looking to buy in and shove the market back up towards those highs. Over on crude oil, today was inventory day. Came out a little bit more along the lines of the API not even being close, and there was a little bit of a detach with the API versus the forecast. The forecast was at a -3 in some change million. The API was forecasting a +1 in some change, and it actually came out with the actual forecast -3 came out -4. So it was right around that same area. And we could really kind of tell that that was going to be the case all morning. The buyers were supporting the lows. We were rallying higher most of the morning. Deep pullbacks, likely due to that confusion of, well, it may go down, but it'll probably go up. Maybe it'll go down. It'll probably go up, though, right? And we can see that along the entire way. It gives you a good clue. You don't need the news to tell you what the kind of expected outcome is. The market is telling you it right off the bat, right? We're getting buying pressure coming in. They're supporting those lows, and the news comes out, and surprise, surprise, it rockets higher as anticipated by the market movement to a big new high. Now, the big new high was put in, and for the most part, they found a good brick wall at 47.26. They just couldn't break through it, and when they finally did, it twin reversaled straight back down again. The buyers still defending those lows. They're still coming in double bottoms, pushing the market back up. So we do know that the buyers are definitely still interested in this. And now that we have broken above that level of resistance and attempting to use it as support, that adds even more information to us at 47.26 is becoming now resistance turned into support for potential continuation. So looking for a buy move off of 47.26 for continuation back up to a new high with a little bit of a kind of reserve, right? Now the reason I say that is because the last high that we made is really weak, and chances are if we come back to the highs, we may not even break through the highs, and if we do, it might not be by that much. So I am playing it a little bit cautious if we're looking for a buy off that 47.26, because the high is probably not going to be that big, and we're more likely just going to transition into a range. If we do start getting a little bit of a heavier pullback, I would love to see 46.94, 46.76, some of those bigger numbers down there, but chances are we're just going to go sideways for a little while, and the only opportunity that we're going to have is around that 47.26 for that execution of the move back up. And then finally, taking a look at the S&P 500, the big dog for today, huge bullish rallying to the upside. Really can't complain with this amount of bullishness. Just, it was nonstop. All day, the buyers just kept slamming the market up and up and up and up and up. And with that amount of bullishness, we really have to keep our eyes on the fact that at some point, we're probably going to get a pullback. But that said, we're still in breakout mode. The buyers are aggressively snapping the market higher, and pretty much every pullback is getting bought aggressively. The sellers couldn't even get underneath the moving average for more than a candle close before it slapped back up again. So we have a huge amount of bullish pressure coming into the market, and with that amount of bullishness, well, we have to obviously give the give the benefit of the doubt to the buyers. They're snapping everything back up, and given that amount of bullishness, really just any pullback is probably going to be good enough. But if we can get a pullback down to 24.6875, I would love to see some buying pressure in that area. That would be the biggest pullback that we would have had all day, pretty much. Now, obviously, we can get a little bit more than that. Those earlier swing highs turning into support around 24.66 could definitely be an area of interest. And if we can get a little bit further movement to the downside, we can find support at 24.63, 24.62 and a quarter, 61 and a quarter, all the way down. So plenty of room for support to come in if it wants to take a downturn in the overnight. Chances are, though, 68 and three quarter, if we're even lucky enough to get that, might be all that the S&P gives us for the overnight session for a bounce. That's going to do it for the outlook. Now, taking a look at the news for tomorrow, we actually have a good chunk of stuff coming out tomorrow. Tomorrow morning, 2:30, we have out of Japan, we have the Bank of Japan press conference coming out. At 4:30, we have the retail sales out of the UK. At 7:45, out of the Eurozone, we have the deposit facility rate and the ECB interest rate decisions, all coming out at 7:45. The interest rate decision, by the way, is forecasted flat at 0%. At 8:30 tomorrow, during the U.S. session, we have the Philly Fed manufacturing forecasted at 24. Previous was 27.6. Also at 8:30, out of the Eurozone, we have the ECB press conference. So we do have plenty of news going on tomorrow, but it is all very early in the session, and then nothing else big in the afternoon. So it might die off pretty quick tomorrow. That said, we do still have plenty to keep the markets going for us in the U.S. session, though. So as always, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.